Good morning. Welcome to CupO'Forex. This is David Frank with your daily video analysis for Tuesday, the 11th of November. To be frank, there's not a lot of news to drive the markets. This is the exact opposite of what we had last week or the last couple weeks, where news was we had economic data being thrown at us left and right from every single country, pretty much in the world. And this week we don't have that. Looking at today's economic calendar, the biggest thing so far this morning, which just passed, was at 2 a.m. GMT time, China. Their new loans data came out, and it missed the mark. We expected it to print at 857.2 billion, and it came in at 650 billion dollars. This was the biggest news and a bit of a shocker. We have to watch China's economy a little bit closely. Every time we think that it's beginning to accelerate, we get a piece of data like this, and I think China's economy is not going to grow like we had hoped. Normally, we expect that economy to grow 7-8% per year. I think that GDP is going to come in around 7% for the year, if not 7.1%. Next year, it could be a little bit slower. Also coming out a little bit later this morning, in about an hour's time, at around 5 a.m., China comes out with a few pieces of data. Nothing really huge. The biggest one on here that everyone's going to be watching is the Consumer Confidence Index. We expect that number to print at 39.90. Later on this evening at 2000 GMT, the Reserve Bank of New Zealand will release its financial stability report, and their governor, Mr. Wheeler, will also give a speech. This is something that people who trade very widely in the Asian and Pacific Rim will be listening to. See where Reserve Bank of New Zealand is going to be going with their interest rates and so on. If you recall, their currency, the Kiwi, the New Zealand dollar, is extremely weak right now, and that's pretty much thanks to our dairy prices. Dairy prices are getting lower and lower, which is their main export. That's where their currency seems to be going as well. Okay, I'd like to take a look at some technical analysis for today. All right, let's get started with our technical analysis. Off the bat today, first thing I want to look at is the Greater British Pound to U.S. dollar currency pair, the sterling. We are still trading well below a key technical level 1.600, and as you can see, we are in the midst of a midterm bearish trend, and there is a bearish sentiment here. We do have a negative inverse head and shoulders in this area here, as you can see, which denotes further weakness ahead. And that came in right below another key technical level, 1.61500. In that area here, we see the head and shoulders pattern. Well below 1.600, I'm staying rather bearish on this on the sterling. Next up, I want to take a look at the Aussie dollar for today. We saw it trying to recover a little bit with the bearish engulfing candlestick pattern. This occurred right above 0.8545 in that area there, and we attempted to push higher a little bit. We seem to have lost a little bit of momentum now as we're coming to a key technical level 0.8660. Be blunt, we need to break above this level to have any kind of meaningful recovery, and we've been bearish ever since failing at the 55-day moving average here. The Aussie dollar has fallen lower, and we expect that to continue. The last step today, I do want to take a look at the Swissy dollar as well, because we're seeing the recovery in this stall out a little bit. We did push significantly higher. We're above a technical level 95 as we started moving towards parity. And as you can see here, we started losing some momentum. You can see a bearish engulfing candlestick forming here, and we need a confirmation with a close lower before we can say, hey, we have a bearish reversal sign. I want to take a look at what's happening in the 4-hour chart, see what traders are doing right now. You do see that traders, after forming the bearish engulfing candlestick here earlier, have negated that as we moved a little bit higher up today. So now you see a bullish reversal signal, but without a close higher. This is not confirmed, and now we're seeing a bunch of hesitation for today. We could see some sideways trading and some consolidation going forward, for at least for today and maybe through tomorrow's trading session. So we'll be watching this as well. All right, everyone, this concludes our daily video for today. Thank you for listening, and we'll chat again tomorrow.